All right, the latest Bank of America consumer checkpoint is out. One of the big takeaways, BofA says that the consumer still has some forward momentum, but at a more measured pace. Joining us right now is Everett Krisberg. She's the head of the Bank of America Institute. And Liz, what I thought was interesting about this is that the spending per household on credit and debit cards was actually down 2.3% year over year. But that doesn't tell the whole story because we had a leap year last year. So what did the spending look like? How would you characterize it?
Well, great. And good morning, Becky. And I'm sorry I'm not there with you in the studio this morning because I'm talking with investors at the bank's consumer conference later today. But here's what the data showed. You're right. Leap day made things on a year-over-year basis a little wonky. But I would look at the seasonally adjusted month-over-month data to understand what's going on with the consumer spending. And that was up 0.3 in February, which was a rebound from January. But if we pull back just a little bit and look at that 3-month seasonally adjusted rate, it's up 2.4%. Now, that's down slightly from where it was last month, which was 2.8%. But the reality is we're seeing, as you said, we're continuing to see forward momentum, even though it's at a bit more of a measured pace. Now, Becky, you always ask me if we see any changes in the data. And there was one really noticeable change in the data this month, which was in our wage data. And what we saw there, and I always talk about wage data being really key to understanding the consumer, higher income households saw their 4th consecutive month of accelerating wage gains, so up 3.5%. But that was not true for lower income households. They actually dropped by almost a full percentage point. And the reason why that matters, and the reason why I really wanted to highlight this is the first time since the Institute's founding that we see lower income wages growing more slowly than higher income wages.
Liz,
So
you're joining us on a very interesting morning. We've just seen a big pullback in the markets. If you start to add up the losses, the S&P is now down 8% or so for the year, a little more than that.
Historic.
These are questionable times, and people are wondering if we're starting to see a slowdown, if we could head into a recession. Is there anything in the numbers that you go through that would lead you to think that we're on the cusp of a recession?
Well, here's what I would say, and I think that we are seeing the spending happening at a more measured pace. So we're not seeing the same level of growth, but we're not seeing a pullback in spending. It's still up, 2.4% if we look at the 3-month moving average. But what we are seeing in the data is we're seeing some changes in how consumers are behaving. So let's look at groceries, for example. I mean, we can talk about eggs up 15%, but 80% of the retail spending, of grocery spending, has continued to see inflation. It's up 0.5 for meat, for poultry, for fish. So that is making consumers change their behavior. And one of the things we see in our data is a shift from spending at premium grocery stores, which was down 1.4%. And instead, we're seeing an uptick in shopping at value grocery stores. So consumers are changing how they're spending. They are still spending. Spending is continuing to improve, but I think the consumers
but they're trading down. Yeah, they're trading down, which is a little bit of consumer concern that shows with some of these things. We heard from Delta last night that they are seeing a slowdown both in business and consumer spending on plane tickets. Have you seen anything that would show you that when you're looking at travel and leisure? Because those have been some of the strongest numbers you've been reporting.
Well, remember, we are continuing to see services lead retail growth. Remember that we're looking at the consumer business, not the business spending. So we wouldn't capture what Ed was talking about as it related to the corporate spending. But again, I think you're seeing the consumer continue to find examples where they're being measured, where they're being deliberate in how they're spending. Now, of course, again, going back to that wage data, spending continues to be driven by higher income households, and higher income households are continuing to see that wage growth. Where I would be a little bit more concerned is lower income households, because their necessity spending, groceries are 23% of the lowest quintile's annual budget, right? So that is going to continue to eat into their discretionary spending, and you're going to see more of a pullback there. But as it relates to the higher income consumers, yes, the wealth effects after yesterday are not going to be as supportive as they were, but there still is positive momentum there, albeit at a more muted pace.